All right, let's get right into it. We're diving deep into the internet's digital back alleys to tackle a really fascinating question. Can the collective mood of millions of strangers on Reddit, the posts, the comments, the upvotes, can that actually predict the chaotic world of cryptocurrency?
I mean, think about it. This is the central puzzle, right? On one hand, you've got the crypto market. Totally wild, super unpredictable. And on the other, you've got social media, which is, let's be honest, even wilder. It really seems like a recipe for pure chaos. But what if it's not? What if there's a hidden signal buried in all that noise? A pattern that could actually point to the next big market move? Well, that's exactly what we're going to try and find out.
Okay, so to kick off this whole investigation, we gotta ask the first big question. Why Reddit? I mean, with all the fancy financial news and expert analysis floating around, why on earth does the crypto market seem to pay so much attention to this one specific platform? Well, it turns out the crypto market, it plays by a totally different set of rules.
And this really gets to the core of what makes crypto so different. See, unlike the stock market, which is usually driven by big institutions and things like company earnings, crypto is pretty much dominated by retail investors. We're talking everyday people, like you and me. It's also ridiculously volatile, and here's the kicker. There's no standard playbook for figuring out what a coin should be worth. So what does that mean? It means market moves are driven almost entirely by group psychology, by hype, by fear, by sentiment. And that makes social media a direct window into the market's soul. And that is exactly why Reddit is special here. It's not just a constant fire hose of opinions like, say, Twitter. The upvote system, that's the key. It acts as this natural, built-in filter. When a comment or a post racks up a ton of upvotes, it's basically signaling community agreement. It's not just one person shouting into the void, it's a validated, weighted consensus. And for a trader, that is a much, much cleaner signal to work with.
Okay, so we've established that Reddit is a pretty valuable source of intel. But here's the thing. Knowing where to listen is only half the battle. Figuring out how to listen, now that was the real challenge. You see, the first attempts to do this, just trying to measure if posts were positive or negative, well, they didn't really work. And honestly, this is where a lot of the early efforts just kind of fell flat. The correlation was just too weak. A whole bunch of happy comments didn't automatically mean the price was going to shoot up. So researchers realized they were missing some key pieces of the puzzle. They figured out they needed to measure not just what people were saying, but how loudly and how enthusiastically they were saying.
And this is where the breakthrough happened. It's a concept called relative volume sentiment, or RVS for short. The best way to think of it is like a super signal. It combines the what people are saying with how loud they're saying it and how enthusiastic they are, all into one powerful metric. It's just a much, much smarter way to listen to the crowd.
So, how does this whole RVS thing actually work? Well, it basically stands on three pillars. First up, comment volume. It's asking, is there a sudden surge in conversation way above the normal average? Second, sentiment polarity. Pretty straightforward. Is the overall mood positive or negative? And third, and this is crucial, upvote engagement. Is the community actually endorsing this sentiment with their clicks? Are they getting behind it?
But here's the real secret sauce, the magic ingredient of RVS. It's all about alignment. A signal only gets generated when that surge in discussion volume agrees with the direction of the sentiment. So, for example, if you get a huge spike in comments but the overall mood is negative, RVS just treats that as noise and filters it right out. It's this one simple rule that's so powerful. It's what separates a true actionable market signal from just a bunch of random internet chat.
Okay, cool. So, that's the theory behind it. Now, let's get practical. What are the actual tools a trader would use to put all this into practice? What does it really take to build a system that can do this?
Right at the heart of any system like this is the sentiment analyzer, and you've basically got two camps. On one side, you have tools like VADER. It's what's called a lexicon-based model. It's fast, it's simple, you can use it right out of the box. The downside? It really struggles with sarcasm and all that weird crypto slang, words like hodl or diamond hands. Then on the other side, you've got these advanced machine learning models, like RoBERTa. These are way smarter. They've been trained on gigantic data sets, so they really understand context and nuance. But they're also way more complex and expensive to run, so it's that classic trade-off. Do you want speed or do you want accuracy?
So you've got your tools.
Now, where do you point them? Well, these are your digital hunting grounds, your intelligence outposts. You've got the big public squares like r/cryptocurrency, and then you have these niche places like r/crypto moonshots, which is where you might hear the first whispers about smaller, potentially explosive tokens. A really solid strategy has to listen to all of them.
But, and this is a big but, this is where our story takes a bit of a dark turn. Because let's face it, wherever there's a potential edge to be found in the market, you can bet there are people trying to exploit it. That valuable, clean signal we're searching for, it's often buried under thick layers of deception and manipulation.
And this right here is the classic manipulator's playbook, the pump and dump scheme. Here's how it works. First, insiders quietly buy up a ton of some worthless coin. Then comes the pump. They launch these coordinated hype campaigns on Reddit, on Telegram, everywhere. That creates a huge wave of FOMO, the fear of missing out, and regular investors rush in, which drives the price sky high. And then, right at the peak, comes the dump. The insiders sell everything, the price crashes to zero, and all those retail investors are left holding a worthless bag.
So this brings us to what you could call the data quality minefield. And the challenges here are just immense. I mean, you're not just listening to real people. You're trying to fight off coordinated bot armies that are just manufacturing artificial hype. You've got influencers trying to sway sentiment for their own personal gain. Even the most advanced AI models still struggle with all the unique crypto slang. But the real kicker? Legitimate, organic hype can look almost identical to a coordinated manipulation campaign. And telling those two apart, man, that is the hardest part of this whole game.
Okay, so after looking at the incredible potential on one side and the really serious dangers on the other, what's the final verdict here? Can you actually trade on this stuff and be successful? Let's weigh all the evidence we've gathered.
So, the big question, does it actually work? Well, get this. One study that backtested over 8,000 different sentiment strategies found that the top performers delivered a 40x return over 2 years. That is an absolutely mind-blowing number. But
You knew there was a but, right? There's always a catch. And this crucial point brings us crashing back down to reality. See, backtests are perfect, sterile simulations. They don't account for real-world stuff like transaction costs or slippage, that's when the price moves against you while your trade is going through, or even basic liquidity constraints. And all these little real-world frictions can absolutely destroy those perfect theoretical profits.
And this table really helps put everything into perspective. If we look at something called the Sharpe ratio, which is basically just a way to measure your return compared to the risk you took to get it, you can see that trading on pure sentiment is pretty good, but its edge seems to be declining over time. The real power, it seems, comes when you combine sentiment with other tools, like traditional technical analysis from charts, or even more advanced machine learning models. That's where the most robust, risk-adjusted strategies are being built today.
So, where do we land? What's our final verdict? It's this. Reddit's sentiment is not a magic crystal ball. It just isn't. It is, however, an incredibly valuable piece of raw intelligence. For a sophisticated trader who knows what they're doing, it can be a really powerful tool to add to their arsenal. But for someone who's just looking for a simple get-rich-quick signal, it's an absolute minefield.
And that really brings us to the final question, the one I'll leave with you. You've seen the evidence, you've seen the incredible potential, and you've seen the very real dangers. So the question for you is the promise of finding that one perfect signal worth the massive risk of getting lost in all the noise? Well, that's for you to decide.